Now, let me welcome Shantanu Roy, Chairman and Managing Director at BEML, with us in the studio. Mr. Roy, thank you so much for joining us, and great to have you here in person. So much happening with your company. You know, we were fascinated seeing the unmanned trains, the unmanned metro visuals, drones. What's new?
Very good morning, and really it's a pleasure being here with you in the studios. A lot of things have happened, a lot of things are happening in BEML as well as in the country, in the sectors that we work in, rail and metro, defense, aerospace, even the mining and construction business vertical. So these are exciting times. A lot of initiatives that have been taken. We are in the process of transforming the organization, and you know, one of the major structural changes that we brought in was the strategic business unit concept. We started with 12 strategic business units and 2 micro SBUs. And now we are on the verge of creating 2 more strategic business units. The idea is to have a very focused approach for particular business verticals, not only business verticals, but the product lines as well. Number 2, to create a leadership pipeline. Number 3, to improve the efficiency and faster decision making. And with that, we brought in a lot of policy enablers. For example, the delegation of power was changed completely to give more autonomy, decision making at the at various levels. So these things, you know, it is stabilizing now, and 25-26 should see definitely a marked change in the numbers as well. We have been able to give decent returns as far as the EBITDA is concerned. Slowly, we are going up from somewhere around 5.5% to 13.2%. It has been a journey over the last 3-4 years, and this year I'm looking at, you know, 14.5, 14.7%, further 150 BPS jump, and slowly take it to around 20, mainly driven by rail and metro and defense and aerospace. If you look at you know, last year's performance, rail and metro could not fire, but mining and defense did it phenomenally well. And defense, you know, for the first time in the history of the company, their contribution rose to around 27% of the top line.
So let's come to them one by one, because there is so much to unpack. When you say you were looking at EBITDA growing to 20%, and that's you know, a very clear focus and a big ambitious target as well. By when, and do you see defense being the driver? As you mentioned, contribution is grown, or will it be rail and metro?
Both, in fact. It will be a combination of both. And as I have always maintained, we have a graded approach to growth. From 13.2 to 20, around 20 cannot happen immediately. It will take a few years. You know, at least I look at a time horizon of 4 to 5 years from now. And if all goes well, we grow the way we intend to, and the defense, aerospace and rail and metro, we keep on firing. Definitely, it's a possibility.
Mr. Roy, your new identity, which you spoke about with us when you were here in our studios in December as well. So aside of a new logo, there's this new vigor that you are probably pointing towards, right? 14 SBUs instead of 12 is great. How does the road ahead look like, one, in terms of revenue contribution from all of these units? Because when we look at your financials, sir, from FY22 to FY25, the margin uptick has ensured that your bottom line numbers grow very handsomely. Your top line has consolidated. Is this the consolidation that comes in before a breakout, if you will?
I look at it that way. Yes, it has taken us some time to consolidate at this level, and the intent of the SBU formation was very clear, as I said, and also finally every SBU has to contribute at least a specific number, and the micro SBU is supposed to contribute half of that number.
Got it.
So when it happens, it will take some time. Again, it is not going to happen overnight. Already some of the SBUs, the bigger SBUs, they have started performing. That's the reason, you know, in spite of the fact that rail and metro went down by 50%, but we were still able to hold on to our top line and improve the bottom line. It was only because of the strategic business unit concept, and that some of the strategic business units, they performed very well, phenomenally well.
Got it.
For example, the high mobility vehicle SBU, it grew by more than 100%. It doubled its revenue.
Okay.
Right.
Okay.
So these were some of the very important pluses for us, because of which, you know, we could retain the top line. And this also talks about the resilience of the
Of course
company.
it does. So the question then, Mr. Roy, would be this, that you mentioned that maybe defense, maybe mobility takes forward your operational metrics higher. Are those two the segments that take the revenues also higher in times to come? Is it the reversal of fortunes in the metro and rail segment which does that? And does that happen in FY26, or do we look at maybe starting FY27 on the revenue front?
On the revenue front, FY25-26, we should see a further, you know, enhancement in the numbers, driven by the defense aerospace and the rail and metro. Because there are two reasons. One is that the metro orders the execution timeline starts from this year for the Bangalore Metro, for example.
Okay.
We are supposed to supply 20 trains in the current financial year. Then the Vande Bharat sleeper, which was the first proto, and we were waiting for the clearances, including the CCRS clearance. So now we are ready to roll out the other trains. Already the car body shell is ready. We have started the furnishing work, and this year we will be completing all the balance orders. So these two things, these two projects itself, you know, should see a substantial increase in the top line from the rail and metro point of view. As far as defense aerospace is concerned, there is, you know, one is our core strength on the land system, that is the high mobility vehicle platform. So we have enough orders with us, and if we are able to, you know, execute the existing orders itself, there will be huge growth in defense as well. Another important strategic shift that we have brought in the company is that from being merely a platform supplier, we have now transitioned to a system integrator. Not only our high mobility vehicle, but the complete system on the high mobility vehicle.
In defense? This is
in defense. In defense. Already we have started executing two such projects. One is the command post vehicle, the other is the mechanical minefield marking equipment. So these two projects we have already started executing. Some more such projects are coming our way. It should happen this current financial year itself. Apart from that, considering the current situation we are in and the op requirements, definitely I look at some more orders quickly in the current financial year, and a part of it which we have to execute within this year itself.
What is the order book outlook on defense in light of what you're saying? Have those conversations started? Are you seeing visibility on, you know, those orders?
So the order book outlook is the overall order book outlook, out of which defense should contribute at least some 20%. 20% should come from defense. And that includes these op requirements. It includes some systems.
What's the number you've penciled in, sir?
Number, you know, I have I have already indicated. We ended the year with 14,610 crores, and I'm looking at the same number as a further order inflow in 25-26. And once we are able to execute, you know, a part of it, and the total order book kitty. So with that, we should end above the current year's order book value by at least, you know, more than 50%.
No, so same number you want to add. So 14 plus 14, 28?
Yeah.
Is that what you're saying?
So your existing order book in your lifetime has been 14,000 crores thus far,
Yes,
and you're
yes,
saying you will
yes.
add that equal amount in 1 year?
Yes,
Wow.
it should. It should.
That's a huge headline there.
It should.
I'm sorry, just one thing I was fascinated by since I saw those visuals is on, I'm going to come back to the Bangalore Metro. Is this driverless metro?
Bangalore Metro is also driverless metro. And the driverless metro, it's called UTO, the unattended train operation.
Yeah. So just explain this to us. So the new metros that you're working on has the technology where there is no driver required at all.
Yeah. It started with Mumbai, and there are different levels of automation, you know. So this is called the grade of automation 4, the highest level. And what makes it driverless is mainly the signaling, the onboard equipment, the wayside equipment, and the TCMS, that is a train control management system. And there is a thing called the communication-based train control, which connects the train signaling and everything to the central command center. So it is a graded approach. It again, you know, straight away the train cannot run on a UTO mode. So it has to go up gradually to UTO mode, and then finally it has to be approved by CCRS. Once there is a approval by CCRS, then only it can run in a UTO mode for commercial purposes. In Mumbai, it's a work in progress. Bangalore, every project now is coming with the UTO. Even the Chennai that we are executing, the Chennai Metro order, 210 cars, it is also with UTO ultimately.
So by when will this be a practicality on ground for riders?
It all depends, you know. In one or two cases already it has been proven some 3 years back, but still the UTO mode has not started. I mean, there are a few cases in Delhi Metro. So it all depends.
Got it.
But the capability is there in the technology and in the trains that we are supplying. That capability is there that it can run. It is designed for UTO.
Got it. Okay. Okay. This is very interesting. The other small clarification that I needed, sir, was this: that when you talk about the 14,000 crore order book currently and add in 14,000 crores, does it include aerospace and maritime orders as well, or that is separate?
No, it includes that as well. But you know, the aerospace and maritime order, in terms of the absolute numbers, may not be very high in 25-26. It will be mainly driven by, again, rail and metro. It will be driven by our existing core capabilities in defense, and of course the mining construction. So the aerospace maritime orders in real terms, if you are looking at a quantum jump, it may happen from next year only. It is not going to happen this year.
Got it. The other aspect would be, what's the kind of Capex requirement that you need for all of this going ahead in order to bag the kind of order flow and then up the revenue run rate? And a word on the debt equity mix as well, and how does that shape up going ahead?
For you know, meeting the aspiration for 25-26, the only Capex that needs to be completed, the facility that needs to be completed is the Bangalore facility, wherein a Capex of around 230-240 crores is being infused. The civil work for the plant is getting ready by August, September, and another 2-3 months before the machinery comes in, we are setting up a very modern rolling stock manufacturing plant at Bangalore with the latest welding technologies, all robotic welding. And it will have a complete setup right from the sub-assembly manufacture to rolling out the train and then testing it. And it is a very versatile facility, very robust facility, which can, you know, help us in rolling out standard gauge, broad gauge, Cape gauge, everything.
What is the Capex you're looking at this year?
The Capex, the total Capex that we are looking at this year will be around 600 crores, and it includes this current facility at Bangalore, plus you know, some more facilities we are creating at Kolar Goldfields, that is mainly for defense, And Mysore unit we are now developing as a hub for defense and aerospace. So we are going to infuse Capex for the aerospace facility in Mysore, as well as more defense facilities in Mysore and in Palakkad as well. And of course, to cater to our future needs, we have this new plant which will come at Bhopal. So that we can double the capability for the rolling stock.
What does all of this do to the debt situation?
As of now, the debt, we have not gone for a long-term debt, but we are working it out. We are talking to various financial institutions, especially the Bhopal plant. We would like to go for debt financing. It will be better that we go for a debt financing on a long-term basis. At the same time, the idea is that we will not wait for the complete project to be finished. We will do it in phases so that we can start rolling out the rolling stock, the trains from the Bhopal plant within a period of say 12 to 14 months from now for faster cash flows. And we need that as well.
So any fundraisers on the anvil, or you do not require that?
You see, there are two ways of raising funds. One is through the equity and the other is through the debt. Through equity we cannot do, so we have to go the debt way, and we don't have any long-term debt at present. So we are looking at it very closely to go with, debt.
Can I just ask one macro question, sir? I mean, for all the promises, I'm not saying in a bad way, I'm just saying that there's a lot of talk around how year after year, the demand of railway coaches, railway equipment, etc., will keep on going up, right? The results from some of the railway coach manufacturers or railway wagon companies over the last 12 months have anything but that. And their outlook also, they're setting up capacities, but they're not really talking about gangbusters growth. So is it that there is bit of a deviation from the promise of that Indian railway growth story, which was very prominent back in 2023, mid 2024?
No, I don't think so. There have been certain course corrections, maybe certain changes in the direction from a particular brand of trains to a different brand of trains, more so considering the safety concerns, right? So that is one part. Second is, so in that regard, basically, replacement of the old ICF coaches with the LHB coaches, that is number one priority. Then, of course, the next big thing is what we are working on is the high-speed train, the bullet train, which should be a game changer for the country. It's a collaborative effort of the Indian Railways and National High Speed Rail Corporation and BEML. So it's again, it should be a game changer. We will be at a different level in terms of the capability, in terms of technology.
What are the timelines for the Mumbai-Ahmedabad one?
The timelines, it's just a proto train. So let us be very clear, it's a proto development we are doing. And the timelines are also very ambitious, sometime by December 2026, plus 3 months here and there. So very ambitious timelines, and it's a very, very, I would say it's a niche kind of a project.
Please count me and Tamanna in for the proto run.
Mr.
Roy,
please do invite us for a ride. We'd love to come on.
Sure. 100%. Most welcome,
All right. Thank you so much, Mr. Roy. Shantanu Roy, Chairman and Managing Director of BEML, speaking with great clarity on what the plans are. And
Tamanna, they have a new logo, so it kind of exemplifies the new BEML, I reckon, right? So looking forward to that.
Yeah, absolutely. Thank
you.